Hello and welcome, everybody. This is the Open Bar. I'm your host, as always, Steve Straza, Chief Market Strategist at All Star Charts. We do this show every week, right after the morning show on Tuesday mornings. Throw up my slides. Oh, God. How's everybody doing today? Risky business in the chat. JH, Craig, Rachel, Dan, how's everybody doing? I thought we would just hit a slide deck today. We are doing the mid-month conference call. I'm taking over the calls at All Star Charts. There's a new sheriff in town. I think we're going to sound far more bearish on this month's call than last. And the reason for it all comes down to price. I don't care much about breadth right now. I don't care that seasonality should be a tailwind. I don't even care too much about some of these risk appetite ratios because they were really bad signal last month. Intermarket seems more and more important these days. Why don't we start there? This is the dollar. I think we just have to follow price in this market right now. It's all about price. If it looks like a top, I think we should treat it like a top. If it looks like a little tactical base and something like the dollar, it probably is. 100 is a critical level here. You could see just in this chart the way that this VWAP from COVID kind of acts as support and then resistance over the years, and it's doing it again now. If we break back out above that level, again, call it 100 in the dollar index, it's going to put further pressure on risk assets. Now, as this is going on, this is what the market looks like. We've seen tops like this. In fact, this looks eerily similar to the distribution patterns that printed just before the 2022 bear market. And you know what happened back then during that cycle? They were everywhere. They looked just like this. Now this is financials. The last one was the equal weight S&P 500. If these tops complete and one big down day today, I mean, pretty much makes decisive resolutions in a lot of these charts that I'm about to show you, right? So equal weight S&P 500 already down there, testing lows from this summer. XLF about to be at its lowest level since May. Banks look awful. The big banks, which looked like one of the strongest areas of the market just last week, the week before, catching lower. I went across the board yesterday and just shorted the leaders. Okilo puts, Palantir puts, AMD puts. The leaders are catching lower to the laggards and not the other way around. Right? In healthy bull cycles, the laggards catch higher to the leaders. Not happening today. That's not what I'm seeing one bit. We've been out here open for about a half hour, trying to bounce, already being faded a bit. We'll see. We'll see. The way I'm treating all of this is if it looks like a top right now, it's probably a top. Let's treat it like a top. You could get short, but you want to be tactical with your entries. For example, just a couple days ago, I was like, I'm not chasing on the short side here. And then yesterday, with the way the conditions deteriorated, I said, I got to add short exposure. Now, the way that I'll do that is I'm in weekly calls or weekly puts or next week's puts. Okay. And I'm probably going 30, 35-ish delta. And I'm trying to get 1-2 big down days, sell a quick double, get my risk capital back, follow through the next day or day after, hopefully have a multi-bagger. On the short side, in times like this, when the market really, at this point, there's a risk of, I guess, bearish patterns completing and a big downside leg, right? Downside reaction that would come with momentum if some of these patterns completed. The way you want to do that is position yourself for the sell-off, but for a quick sell-off, right? And if you time it right and you get in just as that downside momentum is entering these different areas of the market, then you could really take quick profits and then be ready to nail the turn and go in the opposite direction. Because I don't think that the bull market is over. I think maybe a steeper, more severe correction than most of us were prepared for just a month ago is definitely underway. We've been talking about it here. We've been getting increasingly cautious. We've been adding bearish exposure, right? Talking about dabbling a little bit on the short side, maybe sitting on our hands a little bit on the long side, mixing in some shorts with some longs. If these are tops, I think that correction, or what started as just some weak market internals last month, I think you're going to see the major indexes, the major averages, stuff like the sector spiders here. This is XLF and XLI, complete these tops and react lower. How low do they go? I really like looking at the VWAP from the April lows. So I don't have it shown on this chart. We might flip it to live charts in just a bit here if you guys want to. But if you drop a VWAP, see right here where my cursor is at the April lows, it's going to come in. And to me, that is the first logical line of support if these tops are what they appear to be. Right. So you could do this in all your charts at home. We can flip it live and show some examples of this in just a second. But let me get through because I have a bunch of distribution patterns here. Tops, failed breakouts in the case of the Russell 2000 here. This is a monster level, what, 245 in the IWM? So that's it zoomed in, tactical top. But look at where it's happening when you zoom out. Yikes. Big level. I think if you could pick like one monster level for the entire market right now, things were looking good not long ago. Oh, we're rotating into small caps. Finally going to see some leadership from small caps, right? It would be strange for a healthy bull cycle to not include some leadership from small caps. Nope. Failing on an absolute basis, failing on a relative basis too. And that's where we're at. If you look at some of the more speculative groups, right? This was one of the leadership ARK funds. This is ARK FinTech, Financial Innovation. Tactical top. There's the VWAP from the April lows already coming in, right? Getting broken here. Bears are in control. Bears are in control when you see a pattern like this. Hottest stocks in the market, quantum computing. Really, at least this year, hard to find a better group, right? This is what they look like. That's a top. I mean, if we're back below 100 in QTUM, I don't know, how low can we go? 60? It's what these stocks are. High flyers, right? So they're going to catch momentum in both directions. And right now, momentum is to the downside. Tesla. Looked like this Mag 7 laggard was going to catch higher to its peers. Finally stage a big breakout. When you zoom out on a chart like Tesla, it looks a lot like the Russell 2000 that we just showed, right? Looks a lot like that. Looks like Tesla was about to break out. This is it zoomed in. No, completing a top for now. Completing a top. Let me just check the intraday. Yeah, we're on rollover alert here, right? So they took a shot. They took a shot higher, and no, Bears in control of the tape still. We've been saying it. And then even if you look at the risk appetite ratios, this is equal weight discretionary versus staples, confirming the price action on an absolute basis, right? What do I mean by that? This is a risk on ratio. We want to see it move up and to the right, make new highs when, the major averages, when stocks are making new highs, because it supports that bullish thesis, right? Right now, it's the opposite. We're seeing all these tops across the market. And when we look at our key risk appetite ratio, discretionary staples, it's saying, yeah, those are probably tops. Trust those tops. We're topping out here too. Last but not least, can't have a conversation about risk appetite without talking about high yield bonds. This is HYG monster level here, right around 80, right? We peaked out here last summer, again earlier this year. Then we had the big Q1, Q2 drawdown, broke back out, now topping out, testing this level again from above. Looks like we're breaking it. HYG today, rolling over just like everything else, down slightly. It's literally sitting at 80 right here, right now. I took a couple shots at this private credit stuff. When we had that first shot across the bow, if you go back on the chart and look at October 10th, that was like right around here. There's a big sell-off day. High yield got absolutely rocked, right? The S&P 500 on October 10th was down 2.7%. That was the shot across the bow. S&P right now going on to test that level. I think, we had a magnet there around the 655 level. That's really it for SPY right now. If we're below 655, the way I have my charts marked up, by the way, guys, without flipping to the live, is down to 620, which is where the VWAP from the April lows comes into play. So not the end of the world type of a sell-off, but another 5 or 6% get you there in the S&P. Now, to do that exercise with the Qs, I know I don't have it up, right? That level comes in right around 556, 557, down 5 or 6% from current prices. That's where I think we're going. So I took a shot at some of these private credit um, players on the short side a couple weeks ago. I'll tell you, kind of lack any beta. Some of these stocks like Blue Owl and Hercules, but it was the right idea. This top completed. I don't think that bodes well for this whole issue, whatever it is. Wall Street Journal's been reporting a lot about AI and the financing around it. A lot of these companies are involved, so they're kind of center stage for the current sell-off. Stuff like Blue Apple and even Hercules Capital. You got a nice top there. I would say this one's a lot more actionable, but again, slow mover. If you do get a big break here, yeah, maybe you go back and test those lows from the prior cycle. Who knows? But these are the kinds of stocks that I think will show some real weakness if that situation worsens. I'll be looking at the creditors like Hercules and Blue Owl, and for now, they're showing no signs of bottoming. They're headed lower. And I think that, is probably good evidence that this chart is going to complete this top and head lower as well, high yield. And then even when you look around the world, China, pretty strong, right? Was holding up relatively well, but completing tops out there as well. Even the strongest emerging market countries faltering here. When downside volatility picks up, correlations spike, and everything in the risk asset landscape kind of sells off together, and that's all you're seeing. So Chinese internet stocks, no different. Huge level here around 38. We're breaking it right now, trading around 37 and a half out here today. And then I think I had a chart of Germany that I wanted to touch on. Yeah, and there's Germany, right? So speaking of international stuff, 40 is a monster level in EWG, right? So it's not just China, it's not just emerging markets, even developed markets, Europe, something like Germany, showing the same sort of price action, completing a bearish pattern here. So I think for now, you either want to look for short opportunities on bounces, or just kind of lay off on the long side because the bears are taking more and more control of more and more areas day in and day out. Sure, I could show you charts of healthcare right now and brag about the resilience and energy, but I think for most people's portfolios and for what most people are trying to achieve, it's important to just be aware of the risks out there for most other groups, right? 9 out of 10 areas of the market right now, not places I want to touch on the long side. And then again, just before we get out of here, the dollar completes this little base and heads higher. I think it's strong confirmation that this corrective wave, we should expect to maybe continue and be longer and more severe in nature. So I'm going to check the chat quick. If anybody wants us to throw up some charts, we can. Indian market. Howard Marks. PE ratios. What's up, Jack? Yeah, we could dig in at any second, right? Start failing these tops. We'll be out here buying stuff, 2, 3 days from now. But we got to see it. We got to see it. For now, we ain't seeing it. Every day, we keep moving in the opposite direction, right? The bearish evidence continues to build. Bears take more and more control of this market. The tape is just nasty out here. Hard to come by a breakout. And I'll tell you too. A lot of people want to get cute, keep buying more and more healthcare stocks. They're probably going to catch lower with everything else, right? Downside pressure increases. Healthcare won't be spared. Biotechs have continued to trend really well, show a ton of resilience. It's almost like nobody's still paying attention to those stocks. So yeah, still some pockets of strength. We'll look there, right, when it comes time to really start adding more long exposure again. But for now, Yeah, for me, it's bearish bets or nothing. I got some VIX calls. I got some index puts. I shorted, like I said, Palantir, AMD, some other leaders just yesterday. I'm running with some quantum puts still, some Bitcoin miner puts. We have Bitcoin puts, IBIT puts on various housing stocks. We weren't nimble enough to flip the book on the banks. Not trying to chase that. But the banks rolling over in a real way. I think there's areas within large cap financials that are very shortable. Stuff like energy, healthcare, commodity stocks in general, maybe. I wouldn't look for short opportunities there. I think you got big cap tech, the growth trades, a lot of these tech leaders catching down. Speculative growth, you could still pick your spots, but I don't think you want to chase to the downside. The best shorts in speculative growth, I, I mean, that happened 4 weeks ago. If you look at a chart like, some of these quantum stocks, that that's been going on. These stocks are in 50, 60% drawdowns, right? So I think the prudent move at this point, if you are interested, in adding some short exposure, it's not to chase the ones that have already cratered, right? Don't go out here trying to short Mara or Rigetti today. I would much rather, if you're getting short today, short something like Palantir or Okilo. That's a fresh top that hasn't completed yet. Um, so that's it. But it still seems, when I talk to people and just from the stuff I hear, seems like a lot of complacency, to be completely honest. All, considering how, frankly, a lot of these charts look awful. This is how bad things start. And again, I'll say I don't think it's necessarily the end of the bull market. And by that I mean I don't think we're going to draw down 20% at the index level, right? That would be a new bear market. But I think it's going to be, it's a deeper correction than most are ready for sure. And if we look back in a couple of weeks or a couple of months and say, oh, that was the end of the bull market, I wouldn't be surprised because patterns like this are exactly how that starts, right? Patterns like this one in Germany. This is how bear markets start. It's how bull markets end. So again, we could dig in, we shake below some key levels, okay, repair that damage, back off to the races. Great. We'll get behind it. All for it. I think it probably happens. However, we look back next year and said, oh yeah, that was the top. There are a lot of charts here where we would say to ourselves, of course it was. Look at this. Look at the Russell massive failed breakout, 4-year failed breakout in the Russell 2000. Yeah, that's how the bear market began. Of course it was. Look at that chart, right? That's what we would say. So there it is. Look for more tops to complete, right? The more resilient areas, right? Sectors that have not completed tops yet, draw them up like this and then take a look and build a list. Okay. Oh, those are tops now too. That's a top now too, right? Because you're just getting all this bearish confirmation. So something like XLF, XLI today, you got some big levels. Are those going to be tops by the time the bell rings at 4 o'clock? If they are, look out again tomorrow, right? Keep watching those tops. And there'll be more short opportunities if we keep selling. This could be Q3 2023, man. Of course it could be. Henry, I'm ready for it. Yeah. We'll deal with it then. Miguel says, don't let JC's my boy. Robert, talking about German bank stocks. Sure. The Euro banks. If I told you at the beginning of this bull cycle that Deutsche Bank would be a better place to be than Bitcoin, you would have laughed me out of the room, right? Do I have a Bitcoin support level? Yeah. Yeah. Let's do that. All right, so real quick before we get out of here, let's just mark up a chart of Bitcoin. I'm going to flip the screen quick, Spencer, if you could just help me out on that. Okay. Bitcoin, where is the support? Let's zoom on out. Bitcoin has set up in a way like it is today, time and time again, just this cycle, right? I can draw these charts up like tops all along the way. Boom. Was that a top? No. Right. We ended up reversing higher, off to the races. Then again here, right? Was that a top? No. We end up reversing higher, back off to the races. Just earlier this year, right? Was that a top? No. We ended up shaking it off, going higher again, right? So Bitcoin's been here before. Okay. You do see momentum waning, though, right? See the legs higher in between these failed tops, or what they really are is continuation patterns. The legs higher are smaller and smaller every time along the way. See what I'm talking about? This is very important. This is what we mean when we say waning momentum. Big leg higher, right? Off of that 2023 continuation pattern. Next one, smaller leg higher, right? And then how about this last one? Barely even made a new high. Right, so that's waning momentum. We could also show it here with the RSI. Right, you can see RSI cooling off. However, I think this time's a little bit different. I think the intermarket matters a lot. And frankly, we're just seeing no evidence that this is going to be a failed top yet. Right, so I think we treat it like a top as long as it looks like a top. And in terms of downside support levels, let's drop a VWAP from the April low, already well below it. So then what do? I think you go back to that August low. Remember, that's really the last time the market was hit with any real volatility. That was like the Bank of Japan situation. VIX absolutely rocketed higher intraday and then totally came off. Now we're already below that, right? So where is the floor for something like Bitcoin? You have a polarity zone here, clear as day, right? 74. We're below 92. I think 74. That's monster polarity zone. You have some former highs from back half of last year. Then you have the low from April. I think, low to mid 70s is probably where we're going. And then ultimate support level, you got to go all the way back. It's the FTX blow up, right? And the cycle low for Bitcoin back in Q4 of 2022. That gets you all the way back down to 60. So if any of that happened, it wouldn't blow anybody's mind at this point. The technical view continues to deteriorate for cryptocurrencies, for risk assets in general. It's spilling over now to the stock market, even the strongest, most resilient, areas of the stock market, mega cap growth. We were asking the question just a couple months ago, what's wrong with Bitcoin? Is this a larger problem for risk assets, right? Does this go beyond just Bitcoin? We like to think of Bitcoin as a magnificent seven stock. Why? It's got the market cap to back it up, right? It really is, at the end of the day, just a mega cap growth story, mega cap growth stock, just like the names that are in the Mag 7. So we're asking, is the Mag 7 going to catch lower to Bitcoin, or is Bitcoin going to catch higher to the other Mag 7 stocks? This is back, Google was trading at all-time highs, Microsoft, Meta before they were weak, right? So the Mag 7s looked great. What's ended up happening is not Bitcoin catching higher to tech stocks. It's tech stocks catching lower now to Bitcoin. So look at the way that these charts overlay. This is Bitcoin in blue. Let's make it orange, right? Bitcoin in orange, mags in black, right? These guys kind of go together. You saw Bitcoin topping, rolling over, and now you're getting that catch lower in the mags. So you could see it if you do that with something like the NASDAQ 100, similar picture. Something like XLK, right? How much do these groups now catch to the downside? I think we're going to find out a lot in the coming sessions. As downside momentum clearly picking up here this morning. Let's see where this thing goes. Protect yourself. Go for a walk, play some golf. I don't know, go for a swim. whatever it is that you like to do. But time away from the screens is always good. Environments like this when there's probably just less to do than usual, right? You don't want to overtrade an environment like this either. Support at 70K, Miguel says. Henry says, if you were forced to choose between price and a momentum divergence, which do I pick? Oh, Henry, that's the easiest question ever. There's not a technician in the world that will tell you that they would choose a momentum divergence over price action. Momentum is only worth anything if price confirms it, right? These momentum indicators, something like RSI, they're all right. Price, every time. You never go with momentum over price. The momentum indicator is a mathematical formula that is based off of price. Price has to confirm what the momentum indicators are showing you. A lot of people can be misled by these RSIs and other momentum indicators, so be careful. Always price. Nifty 50, huh? What aerobics? Hell yeah, Mark. I'm going to get out there right now, actually. It's been a long morning. MicroStrategy, green in a sea of red. Yeah. Yeah. First up day in a month. I'm kidding. What a shit stock that's been, though, huh? It was really the signal. It was the sign. MicroStrategy has been terrible for a year now. Bitcoin will likely put in a short-term bottom today or tomorrow and begin a counter-trend rally. This will also be positive for equities. That is from the Music Audition username in the chat, who clearly can see the future. All right, guys, thank you so much for joining me. Yeah, XSD. H Chan says XSD 315 was a big level from your post. I find signposts like this in key indexes, and I'll tell you, key indexes. Or speaking of key indexes, there's nothing more important than semiconductors. They're the most important stocks in the world. They're literally the lifeblood of the global economy. Any sort of new innovation, big growth trend, major industry runs on semiconductors, right? So you look at a chart like XSD, it completed the top recently. I didn't bring that one around. Do I have one similar? It looks like this, right? Probably more like this one. XSD completes the top, boom, breaks below 315. Oh, here, I'll throw it up. Sorry, Spencer. Yeah, so XSD, you just draw up like this, nice and simple. You had a neckline there at 315. Our little breakdown level at 315. There we go. Now, where does this react to? Again, drop those VWAPs from the April lows, and that's where I think the first line of support will be. So in something like this, it's 278. So we will see what happens next. All right, everybody. Thank you for joining me today. We'll be back with another edition of the Open Bar. Same time, same place, next Tuesday, right after the morning show. In the meantime, continue to join us every morning, and we'll see you soon. All right. Thanks, everybody. Adios.